A big part of my videos is explanation of how best you can prepare for retirement income-wise, what type of income streams are available to you, and impact of each one of them on your age pension eligibility. I've already explained account-based pensions, otherwise called allocated pensions. To understand how this type of income stream works, watch my video Account-Based Pension, Good and Bad Explained. Obviously, one of the most important types of an income stream in retirement is age pension itself. And you have lots of videos on my channel explaining various issues of age pension eligibility. Watch my latest video, Age Pension Changes. Alternatively, you can watch the full series starting with 9 ways how to legally hide money from Centrelink age pension. There is also another type of income stream that I have not explained yet, till now. However, based on lots of questions and feedback from you, I think it is time to discuss annuities. I honestly believe there is a lot of misconception and misunderstanding about this type of an income stream. Just like any other financial instrument, it can work in your favor if you know when it is appropriate to use it, so it can complement other sources of your income. Annuity can work wonders for some and not help others all that much. It all goes back to your income requirements, your investment risk appetite, how you feel about money, what type of income stream you require. Is income security of importance for you and your overall financial setup? So today I want to explain, number one, what annuities really are, as I see them being misunderstood and misinterpreted by many. Number two, how are annuities guaranteed? Number three, what types of annuities are available? Number four, how do annuities work? And number five, benefits and negatives of annuities. My name is Katherine Isbrandt from About Retirement. I'm a certified financial planner and you are watching About Retirement TV, the place that will provide you with information you need to get ready for your retirement, or if you have already retired, how to improve your retirement lifestyle from the finance point of view. People always live forever when there is an annuity to be paid to them. Jane Austen, an English writer best known from her novel Pride and Prejudice. And an amazing thing is that to a degree this quote is still correct today. Annuities are what can provide you with an incredible degree of income security and reliability for as long as you choose. So let's jump into our topic of today. Number one, what are annuities? In the simplest form, annuity is a contract between you and a financial institution, which is a life office, that will provide you with a predetermined level of income for an agreed and specified investment term for a specific lump sum that you invest with that life office. The holding institution issues a stream of payments in the future for a specified period of time or for a remainder of your life. Number two, how are annuities guaranteed? Annuities are a very special form of an income stream that is subject to restrictions outlined by the Life Insurance Act and regulated by Australian Prudential Regulation Authority, APRA, who continuously monitors investments made by Life Office, ensuring that the Life Office can always meet their obligation to you to receive payments as per your annuity contract. APRA is the authority that regulates the banking, insurance, and superannuation industries. Life Office is required to have a statutory fund that holds enough capital to withstand any market changes. This is why even if we've gone through a huge market crash, such as global financial crisis, COVID, or even now Ukrainian war that immediately impacted the world markets with uncertainty and volatility, your annuity payments are still made from that statutory fund. APRA is the body to safeguard all your future payments for life of your annuity. Number 3, what types of annuities are available to you? In Australia these days we have several types of annuities that have been created for a specific reason or for a specific outcome, such as term annuities, lifetime annuities, and annuities that can assist you with aged care. It is important to know that you can invest into an annuity your private money, so your money from your bank account, or your superannuation money, which you can do by rolling over a specific amount from existing superannuation fund or your pension fund. Number 4, how annuities work. To make sure that this video is not too long, today I will explain term annuities, and next week I will give you a full explanation of the other two types. So let's talk about term annuities. They are similar to your usual term deposit, but rather than issued by your bank, you set them up through the application to a life office, and you can choose the term from 1 year up to even 50 years with income that can be paid monthly, quarterly, or annually, with a possibility of income reinvestment at maturity and with your total assets being repaid back to you at the end of the term of that annuity. Why would you invest then into term annuity as opposed to a term deposit or a high interest saving account? Well, these days, the last option of high interest saving account is just a joke. There is hardly any interest paid to investors any longer, so I'm not going even to be bothered to compare those two. But when comparing with a term deposit, annuities can provide a slightly better rate of return over those shorter terms, but obviously you need to check those rates as they change weekly or monthly depending on cash rates at the time of commencement of your investment. Also, the choice of investment term is greater. With term deposit, it is usually up to 5 years, but please check with your banks. As I mentioned before, annuities can run as long as up to 50 years. You can choose to have your regular payments increased in line with CPI, unlike term deposit. Or you can choose the payments to you to include ongoing repayments of your own capital with zero balance at the end of the investment term. The big benefit is that you can nominate one or more beneficiaries that will receive the term annuity as a death benefit if you pass away, unlike term deposit or any other bank account you set up, where in most cases you have no choice but your savings will be paid out to your estate. And sometimes there is a reason why you don't want a particular pool of funds to be distributed to your estate, but rather avoid will distribution for that particular asset. If this is your situation, you really need a solid financial advice how to set up your assets from estate planning perspective. As mentioned before, I will go over lifetime annuities and aged care specific annuity next week as they require a much longer explanation. Number 5, benefits and negatives of annuities. Let's start with benefits. Payments are provided to you for the life of the annuity contract. Payments are guaranteed as per my previous explanation. While you can choose your age pension eligibility under income or asset test, due to market downturn, your account-based pension can reduce in value dramatically, which will then impact the level of your retirement income, most likely for the remainder of your retirement. But lifetime annuities, once set up, are guaranteed to provide your income payments for the term set up in your application, regardless of market behavior, regardless of changes in regulation. This is just about the only true income guarantee you find in Australia. Annuities can address the risk of outliving your savings. In specific situations and when set up correctly, annuities can assist with improvement of age pension payments. Just watch my video, How to Improve Income and Lifestyle in Retirement. I will link that video at the end with my recommendations. If an annuity is set up with superannuation money, your income payments are tax-free. You have a choice of beneficiary. And if annuity is set up with superannuation money, you can even nominate your spouse as a reversionary beneficiary. Sometimes it is beneficial, other times not so much. Generally, annuities have no product fees. So unlike account-based pension, there is no account keeping fees, investment management fees, administration fees, well, none of those. So now let's have a look at negatives of annuities. Well, once set up, they cannot be altered. Money is locked away, which can be a benefit or a negative depending on your situation. You cannot make partial withdrawals. There is a predetermined withdrawal period disclosed to you in a quote, and during that period, if you need to make a withdrawal, you have to withdraw the full balance and cancel the annuity. Annuities can be complex, therefore you really need a professional advice how to set them up correctly for your benefit. Otherwise, you may end up with a product that is not assisting you with reaching your retirement income and asset goals at all. Here it is, our very first review, part 1 of annuities. I hope you found this video of value, and if this is the case, please give it a like and subscribe to this channel not to miss my next video. And for more retirement information, please visit my website about retirement.com.au. And while you are there, please sign up to my newsletter to be kept updated with all the changes that can impact your retirement. And now my recommendations. Watch the other income stream video, Account-Based Pension, Good and Bad Explained. The second video recommended to watch is How to Improve Income and Lifestyle in Retirement. I think it is a fantastic video explaining different income options. I will speak with you in my next video. Bye!